All right, so start with this. Okay, so charting is technical analysis. There are two types of analysis that you can do when you're making decisions in trading. You can either do technical analysis or fundamental analysis, or you can do both. You know, we like to do both. We like to take into account the charts and things like that, but we also take into account what is called fundamental analysis. Fundamental analysis is just when you're looking at the news and you are, look checking out a company's financials, all that different type of stuff. So I'm going to I'm going to show you guys how I like to do fundamental analysis, which is just the charting. So the thing to know about technical analysis is most of the times you're using, well, all the time, honestly, you're using previous data to try to determine what's going to happen in the future. So does that mean that it's 100% going to happen the way you think? No. Nothing in trading is going to be 100%. If people could be 100% right, they would put every dime they have on a trade. Trading is a probability game. So you want to make sure that your probability of being right is higher than your probability of being wrong. Because truth be told, when you get into the trade, you might be thinking that something looks good for a call, but it's also someone that's thinking this looks good for a put. So you want to make sure that your probabilities are intact, that the probability is in your favor. So the first thing you got to know when you're trying to chart, you have to know what you're looking at. I use Thinkorswim. I also use TradingView a little bit, but I use Thinkorswim because I am with TD Ameritrade. But the charts work the same. So the first thing you want to know is what you're looking at. So as you can see right now, we're looking at SPY, which SPY is SPY, which is short for our index, the S&P 500. The S&P 500 holds our top 500 most valuable companies in the market. So a lot of times you can look at SPY and you can kind of determine how our market is moving because you have such a large amount of companies in this one little ETF. So that's why SPY is very important to look at. Another thing that you will see us talk about a lot is the Dow, which the Dow is actually JA. Oh, no, that's not. No, maybe I'm thinking of a wrong ticker, but the Dow also has a ticker as well that you could trade options with, or you could buy it. But we typically don't do. We typically just focus on SPY. But the Dow does have a stock as well. Both are ETFs. So you'll hear us say a lot the market, the market. When we're talking about the market, we're talking about the Dow. So the Dow holds the top 30 most valuable companies in the United States. So companies like Apple and Nike, all of those are in the Dow. So when we're saying the market, we're talking about the Dow. So the first things first, you want to know what you're looking at here. So as you can see, these candles, all of these candles have different shapes. They have different meanings, and they are placed differently on this grid. So you want to know exactly what your time frame is telling you. So since I'm on the 1 week chart, each candle represents an entire week. So if we zoom in here, Each of these candles represents a whole week worth of data. So you have a lot of data in this chart right here. So if I change it to a 4-hour chart, each candle will represent 4 hours. Each of these candles are 4 hours worth of data. Same thing if I want to look at a 1-minute chart. Each candle represents 1 minute of data. We'll have to do a whole nother zoom on what the candles mean, because that's a whole nother topic. But that's one of the first most important things you have to know is what you're looking at here. So the first thing I like to do is I like to start off at a large time frame, like this 1 week chart. And I like to plot my support and resistances. So what is support and resistance? Support and resistance support is places where the stock has had trouble going below, and resistance are places where the stock has had trouble going above. So you could spot this pretty easily on a chart. Drawing tool here. I'm gonna use a drawing tool here. You want to try to go from left to right. But what you'll notice is a lot of places where you plot a support or resistance over here, it will still hold over here, which you will see. No matter where you plot your support or resistance lines, they're gonna hold true. Especially if you see it on a large time frame like this. So I'm actually gonna use Netflix, for example. To clear all this off. Right. So this is a three-year 1 week chart. So once a year, each candle represents an entire week. So we can see data all the way back from 2018, right here. You see 2020 is over here. So all I do is I just come from left to right, and just plot where are places where the stock has had trouble going below, which is the support, and places where it had trouble going above, which is the resistance. So let's focus on this area right here first. Let's see. Support here. And you know a support, which is you want to make sure at least 2 places where your candles hit off of. So you see there, 4 or 5 places where it's hit off of right here. So that is a support. So next we're going up and to the left. Let's see. Good place it here. Okay, I found some wood. Right, that would be a small resistance right here. Now going up. Resistance there. We're gonna move to the left. Let's focus in on this area. Right. Up. And they have a furnace and already got a little resistance right here. Once again, this resistance here because it is at least 2 places where it has hit off and couldn't go above. So as we're moving up now, we have another. We have another slight resistance here. I want you guys to notice something right here. Now, right at this point right here, 288.04. You see, when the stock was below this point, this was a resistance for Netflix. But when we got back above, it turned into a support for Netflix. I think it'll do that a lot of times. When the stock goes below if it stock goes above where it was previously a resistance, oftentimes it will turn into a support, and that will show you how strong the uptrend is going to be. You can see here when it was holding that the previous resistance and turned into support. You can see when it finally bounced off, Netflix went from 288 all the way up to 423. So you can see here, this resistance here, it had a tough time going above it for a while. Finally broke. All right, so we're still just moving up, seeing what we see. Okay. So we're gonna move over some more.
Hey girl, they have a chest, so that's good. I'm heading back now.
So I want y'all to notice this this area right here. Like I said, this is a 1 week chart. So the bigger the time frame that you see a support or resistance on, the stronger it is. You can see we made these lines, back here, and these lines are still holding. Let's look at when this was. This was in 2018. We plotted this line back here. You can see 2019 is still holding. Let's see 2020. 2020 places where it was still holding. So wherever you plot these lines, they're gonna hold true, depending on what time frame that you do it on. So, and also the longer amount of time that something holds a certain area, the stronger it is as well. So I see a little resistance right here as well, at 385. Now take a look at this resistance at 385. It first started trying to break 385, up around up here, and it could not break it for 3 entire years. So since 2018, Netflix had been trying to break this 385.9 area, and it could not break it until this year. And you can see what happened after it broke. It's like when something's in between a range, like the longer amount of time something can't go above, a certain area, you can think of it as like built up pressure, to where when it finally does break above, like it's gonna shoot up hard. So you can see this was the previous high. 420 424 was the previous high. And Netflix, when it finally broke above this resistance, Netflix made a new high at 449. So this is 3 years worth of pressure just built up for Netflix. You can see for the most part, they was in between 334 and this 385 for most of these years. We can also point, we go down here, you can see there's another little resistance, another little support area here at 249. Once again, there are 2 places where it hit, so you want to make sure it hits 2 places. So, when you do it from that point, we did it on our week chart. Then from this point, we just, we want to go down. You could go down to the daily chart, or you could go to the 4-hour chart. Either one would be fine, in my opinion. I like to look at the larger frames, though, to start off. So y'all understand support and resistance so far?
Industry watcher participant for his thoughts right now.
Yeah.
Randall.
Okay.
48. All right.
Wanted us to know that you
So a lot of you guys, a lot of people like to ask, what chart do you like to look at for day trading and which chart for swing trading? For day trading, you want to look at the smaller time frames. You're not really interested in what it's doing, long term, because you're not planning on being in this trade. If you're day trading, you want to be in it for, maybe a few hours. So you wouldn't really be interested in this long-term support resistance. The same way that support resistance works on this 1 day, 1 year chart, or this 1 week, 3 year chart, is the same way it works on a 5-minute chart. It works the same as that way. So we take a look at Netflix on this. So for day trades, I like to use the 5-minute, the 30-minute, or the 1 hour. And then for swing trades, I like to use the 4 hour and the 1 day chart, as well as the 1 week chart.
I think you got mine beat.
So you do it the exact same way. So you just look for supported resistance. And one thing you want to make sure you have your after hours data on, because after hours data is really what can tell you a lot about when to get into a stock. Supported resistance in this after hours area is very important too. So when you see, a lot of times if I say get in something above this point, the reason I say that is because it was a previous support resistance or on the pre-market or in the previous days when I call out these day trades sometimes. So for instance, on Netflix, on this day here, I'm going to zoom in on Netflix. Now this is the 5-day, 5-minute chart. So you can see on Netflix, we plotting our support resistance. We see we have maybe a little bit of support here at 411. You can see a clear resistance right here at 418.
Hey, RJ?
Yeah.
What platform are you on?
What'd you say?
What platform are you using to do this?
This is the 5-minute.
Okay, I have almost everything.
This
is it Yahoo Start?
Oh no, this is Think or Swim on TD Ameritrade.
No, this both marches.
Okay.
But this one over here
But
has more.
everyone doesn't have a TD Ameritrade account, so I suggest downloading TradeView, which the charts work. It works the same way pretty much.
These are for you to build stuff.
Yep, so if you was looking to day trade, say you're in this day right here, and you're looking to day trade Netflix, you would want to get in when it breaks the previous resistance or the previous support from the day before or the previous days. So if you see here, the market open, you could be waiting. You could say, okay, I know I have a resistance at 418. I have support at 411. So when it's in between 418 and 411, you won't even be in no trade at all. You want to wait until it either breaks above or it breaks below. So I'm looking at this. If you would have been in this day here, I typically don't like to trade the first 15 to 30 minutes that the market is open. But if you do, you can see here when Netflix broke above this resistance, you see it ran up from 418 to 420, and it was kind of just stagnant right here for a while. And I'm gonna talk a little bit more about this stuff. It's a pattern right here called a pennant. So a pennant is formed when you notice it a lot when you have a long wick at the top and you also have a long wick at the bottom, and you see these candles just start consolidating right here. So you'll be able to see it in just a second.
But it is great. It is great. There's some wood in the chest if you need it. There's like a whole stack in there. ever need stairs, just tell me because I have stairs.
Right. So you'll start noticing this, you know, the more that you look at it and study it. But this is a pennant pattern, which is it's going most of the time it's going to break above or break below, depending on where you find it at. So since Netflix had pushed up and then formed this pattern, it is going to break upwards most of the time. So given that it had already passed your resistance, and while it was making this pattern, it was still holding, it turned its previous resistance into support. So that could have gave you a clear indication that when it started pushing up, you could have got in. So you could have got in Netflix on the day trade right here and took it all the way from 418 all the way up to 428. So y'all understand what I'm talking about right there?
Okay. Girl, we have a lot of wood that we can probably rebuild this whole thing, like put the wood as support.
All right. And
Like 2 stacks and then a half.
So another thing that a lot of people have trouble with is when to get out of a trade. A lot of times, when something, especially when you're day trading, when something breaks a support or resistance, it will go to the next support or the next resistance. So you see that there's a resistance here, then you can just go up to the next resistance, and that would kind of be like you may want to take profit at this area possibly. So this is where using multiple time frames can really help. I'm looking at this chart right here. I can see I have a high point right here at 428, which is exactly where Netflix stopped going up and started going down. So when you're day trading, you always want to use pre-market data, pre-market support resistance, and you want to use the previous day's support resistance. Or if you don't have a previous day support resistance, you want to use the previous day's high and the previous day's low for your take profit or your stop loss.
This is like the beginning of
So y'all understand why I'm taking profit in that place?
Yeah.
All right. So day trading, you want to use the 1 minute, 5 minute, 10 minute, or the hour. You know, swing trades, you just want to use the you can use the hour chart, the 4-hour chart, or the 1 day, 1 year chart. I'm gonna have to start over my Thinkorswim.
in your room.
So what's some specific stuff that y'all want to know about?
Bro, I got some more blues left.
I was trying to get into like when is the best entry point and when is the best point to get out.
So entries and exits is really determined off of 2 things. You can do entries and exits determined off of resistances or supports, or you can do it off of your stop loss or your take profit percentage. So I know a lot of people like to say if they get down 10% in a trade, they will get out of it. You know, if it's a day trade, then some people, you know, with swing trades, they like to say 30 to 40%. Because swing trade, you typically have to be more patient with swing trades for them to really go your way. So waiting on this to load. Let's go. I'm gonna show you just a second.
All right.
So we can look at an example of that. What's one of the stocks you look at a lot?
Tesla, Space, Spy.
Right.
Like any one of those.
All right, yeah. I think Space was a good one today that you could have capitalized on. Gonna see. Waiting on this to load up.
I'm just gonna mine all the way. Oh, never mind. Okay, I'm gonna. Which side is it on? Up the thing. I'm mining all the way to the back.
Okay.
But I'm right by it and I'm mining.
So we look at Space. We're always gonna start from the 3-year 1 week chart. You can see. I'm gonna clear off. You see it was down here at $6 and they ran all the way up to 42. But since that point, they got pushed all the way back down to almost where they started. But they're coming back up right now. So first thing you want to do is try to plot your support and resistance if it's any on here. Larger frame. This high point as well. So it's really not a whole bunch of support and resistance on Space's chart just because of how much they ran up so fast.
Yeah, because it was at 16 something this morning.
Yeah.
All the way up to 20.
Yep. So just gonna come down another time frame and see if we can see any more on here. Got a little bit right here with these 2 candles, 3 actually, maybe more than that. We have a little bit right there maybe. So we got have these major levels in mind for Space. So if I'm day trading, I want to have in mind these levels. So like I said a while ago, the larger the time frame you see a support or resistance on, the the more, what's the word I'm looking for? The longer amount of time that it holds, the better or the stronger it is. So with this resistance right here, since this is on a 3-year chart and it's been holding on these weekly candles, then it'll be a lot stronger than a support or resistance that you see on a 1-minute chart, such as about here, maybe this little small area right here. Right. So with those levels in mind, if I take a look at this 1-day 1-year chart, something I did notice with space is that there is a triangle forming here. You can notice triangles by first of all, patterns are going to usually occur after something goes down a lot, or not even goes down a lot. When something goes down or when something goes up, the pullback is going to be the pattern. So, for instance, right here, when space was coming up here, it was going up really quickly. Went from about $11 all the way up to almost $20 very quickly. So it had to be some type of pullback pattern. The pullback pattern in this instance this is called a bull flag, which you can kind of just see it here. And these patterns are just showing you that it's going to be a continuation if it proves to eventually break out or break above.
Because of the dragonfly doji, or
really, you really want to just look for it to break above. But you can see here with this pattern, really didn't break above it a whole lot with this candle. So it really just started flattening out, and that's how it created. This is how it really created this resistance right here, when it started flattening out and trying to push above, but it couldn't. But you can see when it finally did push above, you see how the volume was a lot higher.
Yeah, the volume picked up.
So that would have gave you a clear indication that, okay, it's gonna definitely go up now. You see from that point, it went from 20 all the way to 27, 28, almost $29 in 4 days.
So that would have been a good entry spot right there.
Yeah, this would have been a good entry. So for your entry, you want to look for something to break a pattern to the upside or downside, or you want to look for something to break a support or resistance. You want to see the volume increase from the previous candles. So like right here, somebody probably tried to get into space thinking it was going to break out right here.
Mm-hmm.
But, and the volume was actually there, but it just didn't break out that time, and it just happens like that sometimes, honestly. You can see the next day it came back down, and it retested it again a couple days later with almost the same amount of volume. So, and it, pushed up from that point. So honestly, if somebody would have got in here, this still would have been a good entry for a swing trade, because it only took, a couple days for it to really start taking off.
Got it.
So with your entries and exits, you always want to look for a break or support resistance, or a break of a pattern with good volume. So you see with this right here, when it created this resistance at 24, you see it 2 days it couldn't break above, but the day that it did break above, look at this volume compared to all the other volumes.
Yeah.
And you can see what it did after that with all that volume. It pushed all the way up to 42 within 3 days.
Yeah.
So yeah, with space coming down this much right here, I can see a little pattern trying to form. So when you want to look for triangle patterns, you're really just looking for, you're honestly just looking for an uptrend and a downtrend, and they kind of to converge. So honestly, I could do it like this. If I'm looking at this 1 week chart, see this uptrend right here. And you can see this downtrend right here. See that?
Mm-hmm.
So my lines ain't perfect, but you wanna try to get it on the wick. So I'm gonna try to make it better. You're making your lines, you want to try to make them off of the wicks. To make sure that your line is valid, you want to make sure that it touches on the wicks, if it has a wick, at least 2 times. So the line ain't perfect, but you can see that it will touch here, touch here, here, and then from the downtrend, make this a little better. See, it touches right here, 3-4 times right here. So when something gets closer and closer to the end of the triangle, it has to break out either way. You can see here it's breaking out to the upside right now, but with also is break out to the upside, you still have this resistance right here at 20. So we take a look at the 1 day chart. Look at how it's breaking out right here at the end of this triangle, and look at the volume.
So by the end of the triangle, that would have been a good entry point.
It would have been a good entry point depending on what it would have done, because it easily could have pushed to the bottom and gone below. And if you would have entered for it below, then your take profit would have been your next support, which was down here at 12. You see what I'm saying?
Mm-hmm.
So support and resistance is really what I love to use for my entries and exits. So we got this triangle here. We see it broke above. So this could definitely be a great swing trade, especially if it closes above this little resistance right here tomorrow. So with this longer term resistance in mind, let's look at, so we see that it could be a great swing trade. Let's look for a day trade. So looking at the 5-day, 5 minute. All right, we're gonna focus on space, this area. This is actually perfect. I ain't even see this. So look at space right here. On this 5 minute, you have a resistance right here. Y'all see this?
Mm-hmm.
All right. So I'm gonna plot this right here. Say maybe out here you have a resistance, and you can see on your aftermarket data where is the resistance. The resistance is right here on this same little area right here, and it had trouble getting above it in pre-market on the after hours as well. So it's showing you that it was a pretty strong resistance for the time being. If you want to make your support, you put your support right here. You could make it about here. Maybe you have a lot of places right here where it bounces off. So this after hours data is very important. It is very, very important, honestly. You see it's a lot of times when it was bouncing above when it hit down here. So what you should be thinking, whenever it's crazy because a lot of times when I tell you guys about this stuff, I would have these things already drawn out before the market even opens. You shouldn't be trying to make lines, trying to make long-term support or resistance lines after the market is already open. You should already have these down pat. So, yeah, before open. Now, when something makes a pattern, when something makes a pattern midday, then you obviously gonna have to draw midday. But like your support and resistance, you should have those already drawn before the market even opens. So if I would have been looking at space today, I would have said, okay, well, I know space just had earnings, so I know a lot of people is gonna be on the stock. So I know it's gonna have a good volume and it's gonna move. So I would have had to say, okay, I'm gonna get inputs on space under this line because this was our support. And I will get in calls above this line because this is our resistance. See what I'm saying?
Mm-hmm.
But I also want to see that
once it broke above, that will let you know that's a call to get a call.
Yep. So we looking here, you can see when the candles wasn't moving a whole lot, the volume was dead. But look right here. These two candles, these two pushes above, this, man, look at this volume. This is perfect. You can't ask for a better setup than this right here, honestly. Pushed above the resistance, and the volume is crazy. Usually, most of the time, you will see the most volume occurs in the first candle. But, man, for something to have this much volume, 10, 20, it's showing you that it's finna be an uptrend. So guess where it pushed to? Let's take a look once again at our long-term chart. You can't see it that good because I've drawn other stuff, but we have our long-term support at 20.13. So when it broke above, it was gonna go to the next resistance, and guess where it started having a little trouble at before it finally pushed above. Right here at this point. So you honestly could have took profit right here. And that would have, you might think like, you might think, oh, that ain't nothing. That's only like $1 move, a little bit over $1 move. But you also got to think with these little small stocks like this, with a good contract, $1 move can be $50. So just think if you get 2-3 contracts, a $1 move would have got you, you know what I'm saying, $200-300. So, and what did I say earlier? When something runs up, it has to pull back. And when something pulls back, it's gonna form a pattern. So see if it formed any type of pattern. Let's see.
Is that a double bottom?
1 minute. Let's see. I wouldn't say it's a double bottom. But where is it? Right here. Saying on this pullback, when it started pulling back, you could have. This is where you want to make your stuff midday. When something's gonna form a pattern after a run up. So you could have had, could have said, all right, you got your little bull flag right here. Boom. And then what happened when it pushed above? What you see again? Look at this volume. And guess where it pushed that? Right here at the resistance. So 2 times you see at the resistance, the volume should be increasing. So if you don't see an increase in volume, I wouldn't get in. Sometimes you're gonna see an increase in volume and it's just not gonna go your way. That's just how it is. But when you see something like this volume spike like this, get in because it's finna go. So you could have took profit here. You know what I'm saying? You could have watched it. You seen this bull flag right here. When it pushed above, you know what I'm saying? If you was like, okay, the volume's not that good on this one. So I'm gonna see what it does this next candle. And also with this next candle, which I'm going to highlight this candle right here. Does anybody see something in particular that's good about this candle that you definitely could have added with the fact that it's pushing above resistance and the volume that could have said, okay, I can get in again. Look at this zoom in. Look at this wick at the bottom. When you see a candle with a wick at the bottom, that means that it has buying pressure. So at some point in time, this candle was a red candle, and it was all the way down here. But when you see a long wick at the bottom, that means that buyers stepped in and they pushed all the sellers out. So when you see something with a long wick at the bottom, a lot of times, not all the time, but a lot of times it's gonna start pushing up after that. So you can see 2 candles in a row. 2 candles in a row, you have 2 candles with long wicks at the bottom. And guess what happened after those 2 candles? This thing pushed up. Now, if you would have got back in right here, you might have gotten a little scared because it also works the same way in reverse. So if I would have gotten in on this candle, either one of these candles, you know, my stop loss would have been if it closed below this resistance right here. So if I would have got in either way right here, this first one I would have been okay, but this candle I might have been a little bit worried because the same way that it means if a long wick is at the bottom, that it's more than likely going to go up. If it's a long wick at the top, then it's more than likely going to go down. But take a look what happened right here. When it came back down, it turned this previous resistance into support, and it bounced right off of it and pushed all the way up to 21. So that's two trades you could have made right there. You know, 2 day trades you could have made right there, or you could have stayed in the whole way through this bull flag if you really, you know, if you got strong hands. So yeah, that's all I really like to do. Y'all can see, you know, not at one point in time have I talked about, you know, oh, my indicators, my RSI say this, my RSI say that. Like, I feel like that when you want to day trade, you have to know about price action. Price action is the way these candles are forming. You need to know what these candles mean and what they're telling you. Same, because like if I would have seen this, if I would have been trading space today and I would have seen this little candle with the volume, you know, I would have hopped in right there. You know, but if someone don't really know what they looking at, and they would have got in, maybe they would have got in here. If someone would have got in on this candle and they see this next candle is just, they were like, oh, it's a red candle, it means it's gonna go down. Nah, not necessarily. It got the buying pressure at the bottom, but if you don't know what the candle means, you might have got shooken out right here. You would have missed this whole, you know what I'm saying, almost dollar move. So with indicators, I definitely do use indicators, but I like to use indicators more on larger time frames than when I'm day trading. When I'm day trading, I like to look at what the candles are telling me. All these YouTubers that y'all see that's making a lot of money, all the ones, you know what I'm saying, well, ones that I see that's making a lot of money, I don't see a lot of YouTubers that's making a whole bunch of money that got whose chart look like this. Your chart should not be looking like this right here. Let me just add a whole bunch of stuff on here. I don't know. Let's see. They have all these different type of moving averages, and you see stuff like this. How many of y'all have seen charts like this? Where it's just a whole bunch of different stuff on it. Like, you know what I'm saying? A whole bunch of different stuff. Like this, it's just confusing right here. Because it's like, you seeing all these people the people that's making money, Mozzie Trades, North Trades, the Kevin dude, Aristotle, they don't have all this stuff on their chart. You know what I'm saying? It's just noise. That's all it is. It's just noise. You see right here, I just talked y'all through, 2 whole trades you could have done just simply based off of simple patterns, volume, and what the candles are telling you. That's honestly all you need. In the same way I did with day trading, you can do it the same exact way with swing trading. Now, am I saying that indicators are bad? No, because I definitely do use indicators, but when I'm day trading, I like to mainly focus on these candles and what they're telling me. So,
Damn, I missed the good shit.
oh, I got it recorded, bro. You good?
Oh, bet. Appreciate it.
Yeah. So I'm gonna take all this stuff off my chart. Shouldn't put that on there. All right. So, all right, this is Tesla.
This one is loaded good.
One thing that I do want to point out about Tesla is they've been in a range for a minute now. By range, I just mean it's just been a point of back and forth, back and forth. You see this right here? It's just been back and forth between 700 and 800. It's been like that since about
last
April
week.
14th.
Oh, 14.
Yeah, I mean, it had this instance on earnings where I don't really like to count earnings day because it's just gonna be a lot more volume than regular anyway. But besides this little one candle right here, it's just been in between 700 and 800, back and forth, back and forth, back and forth. So you could have literally been, getting a call at 700, riding it up all the way up here, getting a put up here, riding it back down, getting a call down here, riding it up, getting a put down here, riding it back down. You could have literally just been doing that the whole month. Probably would have made hundreds of thousands of dollars knowing Tesla, but you don't know that type of stuff gonna happen until you actually see it. So right here, Tesla's in a range. So I'm going to just put this little rectangle here. Just to show that Tesla has been in a box. Tesla has been right here in this little box for a month now. All right. So the same way we just did space, which, oh man, makes that hard to see. Maybe I shouldn't put that on there. Same way we just did space is the same way we can do Tesla. So right now I'm looking at the 1 hour chart, and you can see, I already see a place where I have this little white line, which at some instances is acting as a resistance, and then other instances is acting as a support. So I'm gonna zoom in right here. Right here, this white line right here is acting as a resistance for Tesla. Y'all see why it's a resistance?
Yeah.
All right. Then have another little support area down here. So this is the 1 hour chart, 1 hour, 20 days. So the past 20 days, like I was saying, Tesla just been in this range pretty much. Could not break above my red line up here, which is almost at 800. You can see Tesla is really, really, really struggling up here. Can't break above. Can't break above besides their earnings. And you know what happened on their earnings? They came right back down. And when they came back down, guess where they came back down to? Right here at the bottom of the range. So we have these 3 places in mind. We have the bottom of the range in mind. We have this 760 area in mind, and we have this close to 800 area in mind. So we're just have to keep those in mind. So let's say if we was looking at Tesla today, which Tesla was not a good trade today. Looking at the past 5 days, you can see that this 760, which was previously a resistance a month ago, is now acting as support. Does everybody see why it's acting as a support? Or why I say it's acting as a support?
Because it hasn't really dropped below 760.
Yep. It couldn't drop below 760. It was getting down here, pushing right back up. You have 2 days in a row where it tried to break below 760 and couldn't. So that's your support right there.
For some reason, on Mondays, like Tesla just goes up. I don't know why.
Yeah, they tend to put out a lot of news over the weekend. I don't know why, but they just do. So
Like every time I play them on Monday, like I haven't lost not since. And I've been doing that for like the last 2 months.
yeah, they do pretty well over the weekend. But yeah, so if you're day trading Tesla right here, you want to look for, you know what I'm saying? You always got to keep in mind this area, this long-term area right here, as well as your pre-market area, which you got a little pre-market resistance right here. Right at 785, looks like. Oh, I know what I just did there. Let's see, what did I just do? Oh, okay. It's not working. Oh, didn't change my drawing pattern. Yeah. All right, so at 785 right here, we got our resistance, and we'll see if it's some support right here, pre-market. Possibly say this level right here, as well as this low right here. A couple times trying to get below, couldn't. So you see when Tesla, you know what I'm saying, I don't like to trade the first 30 minutes to an hour because stuff like this can happen. You see Tesla pushing up. Tesla got good volume. You see right here. Tesla pushing up. They pushed above our little resistance, but you see they came right back down. So a lot of times what I like to do is I like to see what happens when I see something push above a resistance. You know, I want to see what happens the next candle. So this first candle right here would have been okay. If you're the type of person that like to hop in, you know, at open. Getting in after this candle, you know what I'm saying? If you was to, first of all, when the market first opens, you should not even be looking at a 5-minute chart because you're not going to see nothing but 1 or 2 candles. So when the market first opens, please do not be looking at a 5-minute chart trying to determine if you want to get in or out. Switch to the 1-minute chart. I really wouldn't even go to the 5-minute chart until like 10 o'clock at least. So if you was looking at this 1-minute chart for Tesla, you see when the market first opened, they was pushing below a little bit, but they came right back up, pushed right above our support, and it came up to the resistance, got rejected one time, came back up again. But the volume started dropping off here. So when volume pushed back up right here, you know what I'm saying, you could have got in Tesla somewhere between here. So somewhere in between 786 and 790, you could have got in. And look at the volume here. The volume was amazing right here. But it still came back down with less volume on the next candle. And it just happens like that sometimes. Because honestly, if I was trading Tesla and I seen this candle right here with this volume, I would have been thinking, oh yeah, Tesla's about to run. It just crossed a long-term resistance. I would have been thinking Tesla's about to go. But it just didn't happen. And you know what I'm saying? It just happens like that sometimes. And it came back down. And we see when it came back down, it just came back into that same range. So Tesla really was not a good day trade today, honestly. A lot of back and forth. So let's look at a day that maybe Tesla was a good trade. Right here looks good.
On Monday it was.
Yeah. Yep, this is Monday right here, I think. Is this Monday? Yeah, it's Monday. All right. So, like I say, we want to plot our supports and resistances from pre-market data or our highs. So our pre-market high, look right here, our pre-market high is right here. Our pre-market low is right here. We have support after hours right here. And our long-term resistance is still acting as a resistance. And once again, y'all can see it was acting as a support right here and acting as a resistance when it broke the low. So if I was looking at Tesla, right here, I would have been like, okay, I know I have my long-term resistance here, so I will hop in Tesla if it goes above my pre-market high. All right, so see what happened. Actually, can't even go back to that. If I change the time. Day 1 minute. All right. For some reason it's not letting me go back as far as I want to, but you can kind of get the gist of it. I have to look at the 5 minute right here because it won't let me go back for some reason to the 1 minute on this day. But you can see it with the same, you know what I'm saying, the same stuff. I would have said, all right, getting a Tesla if it breaks above the pre-market high, 715.14. So when Tesla, you can already see Tesla was all the way down here at support and bounced up right here. So you could have had a little bit of conviction that maybe Tesla was going to try to go up today, just because of how it's moving in pre-market. When Tesla opened up, you see Tesla just started pushing right above. And you maybe could have even got in on one of these first few candles. If you was looking at the 1 minute, you would have seen just how much Tesla was pushing up. So let's say you would have got in here. All right. So you could have got in right over the pre-market. So at about 7:15, you would have hopped in. And what did Tesla do? When something runs up, it has to have a pullback. And when it did pull back, it made a bull flag. Wish I could go to the 1 minute. You can see it a lot better. I don't like it how it's right here. Oh, I don't like this. I don't really like this. I wish I had my 1 minute, but you can see it. You still see the bull flag. All right. So it pushed up. It has to have a pullback. So when it had the pullback, it pushed up again, and you would have knew it was a good push up because look at the volume. Two solid candles compared to the previous couple candles. It pushed up, had another bull flag, which I'm gonna show y'all. Right. Pushed up, but it was weak volume. So I mean, at that point, it really wasn't doing too much until you can see it formed a little bit It really didn't even, I wouldn't even say it really formed a whole bunch of resistance. Well, yeah, it did, honestly. So this is one of those instances where I would say that you could plot something intraday. Like sometimes things will form supports and resistances, you know what I'm saying, midday. So at this point right here, you have before, all right, so what time is this? 11:50. So before 12 o'clock, Tesla had already determined that it really had a nice little resistance at 7:45. Y'all see why I put that right there?
Yeah.
So at that point, I would have just left Tesla alone. You know what I'm saying? After push right here got rejected, I probably would have gotten out somewhere on one of these candles after I seen that the push up wasn't going to sustain itself. So that could have been from, say you got in at 718, you could have rolled that from 718. Say if you got out here 718 to 737. So almost a $20 move, which a Tesla $20 move can get you. That's a lot of money in any kind of stock. So it's a $20 move right there in itself. So at that point, you know what I'm saying, you would have been chilling. You would have seen that it built a little resistance. So you honestly wouldn't even have got back in until it started trying to push above again. If we look, let's see what happened. When it finally pushed above, what y'all notice?
Someone after it pushed above.
Yep.
Oh, volume picked up.
Mm-hmm.
Yeah, that.
Now look at this volume compared to this volume over here. Now it's gonna be less volume, you know, in the middle of the day, but this volume right here, this type of volume is the same amount of volume that you were seeing at 10 o'clock. So this would have been your definite that people are buying this up. Maybe I can get back in. And then, you know, let's see where you could have rolled Tesla up right here. And like I said, when things run up, they're gonna push to the next resistance or the next if it breaks, it's gonna push to next support. So it pushed up to 760.97. And once again, wow, that looks bad. All right, so you can't hardly see it, but y'all remember we pointed that that point at 760.97 was our long-term resistance. So it pushed up right back to our long-term resistance again. So that would have been your Tesla trades. And honestly, bro, that's all it is to it, man. That's literally all I do for day trades. Support, resistance, and volume, bro. And what the candles are telling me. That's literally it. I don't use, you know what I'm saying? I know it works for some people, but it just doesn't work for me. Trying to use VWAP. I tried to use VWAP. I tried to use all these when the moving averages cross this and that. Like it just don't work for me. It might work for you, I don't know, but for me, it's just a lot of noise. And you don't want to make your trade harder than it already is. So I hope what I was saying here made some sense. I feel like I might have been rambling a little bit.
I mean, you answered the question I had. Appreciate it.
Yeah. Yep. So entries and exits, man. Just make sure it's breaking a pattern like it was here, or you know what I'm saying, pushing above your support or resistance with good volume. You know what I'm saying? That's all it is to it. Then your exits would be your exit here. If you would have gotten in this, your exit would have been if it would have pushed right back down and closed in this pattern again. That would have been your exit for a loss. But you know what I'm saying, you wouldn't even have had to worry about that in this case. Is it making sense to everybody what I'm saying?
Yes, sir.
What are psychological patterns, or that's what you're doing right now?
Yeah. I think by that count, I think he just meant the like, you know what I'm saying, like I think he basically meant like, why do these patterns work? I think that's what he was saying. So why do these work? They work because a lot of people. All right. So first of all, these little bull flags and stuff, these work because people make it work. Like somebody came up with the idea that when you see this, it means a continuation, and it just stuck, I guess. That's why those work. But the reason that support and resistance work is a little different. So at every support and resistance, you have buyers and sellers. So at this place here, there's buyers and sellers waiting. At this place here, it's buyers and sellers waiting. At every support and resistance, you just think about it as buyers and sellers having a fight, and one of them are gonna win. So this first resistance, the buyers and sellers sitting here, the buyers won. It got up here, the sellers was winning. Sellers was winning the entire day until it finally pushed above. The buyers finally outnumbered the sellers, and it pushed. That's the same reason why. It's the same reason why with Netflix, got so much stuff on this chart. The same reason why with Netflix, with this little resistance right here, that it couldn't break for 3 years. It's just 3 years worth of sellers right here. And every time people just got, like, people literally with millions of dollars have these points, these same exact points on their like alert saying, okay, if it hits this point, this is why I'm gonna sell 100 shares, or this is what I'm gonna buy 1,000 shares, or something like that. Literally, this is literally why it works. Because people with a lot of equity are watching these same exact points. We are small fish in an ocean. So that's why it works. It's kind of crazy how charts work, but it's kind of fire at the same time. I ain't gonna lie. But you just always using previous data to try to see what's gonna happen in the future. But is everything making sense to everybody?
Yeah.
Yep.
Okay.
You learn all this just watching YouTube videos?
Man, I learned this. I'm no expert by far, but
I mean, you is if like the trade success rate that you had, you want to follow.
Please don't hype him up. Please don't hype him up.
Nah, don't hype me up, man. I'm just somebody that like to help, man.
He a friendly neighborhood Spider-Man.
Shut up.
But nah, you learn all this just from YouTube videos?
Learn all this from watching YouTube videos, man. Following these people on Instagram and Twitter, bro. Like, I'm telling you, these people will take your game to the next level. Like, I literally, I learned so much just from following that Aristotle dude on Twitter. Because a lot of these people, they're showing you what they do in their Twitter stories, like, and I mean not Twitter stories, but their Instagram stories. Like, so I would just look at what is he doing, why is he in this, and they would literally put explanations of why they in this. Like the same stuff that I'm showing y'all here, this is what they do. They plot these resistance levels and the support levels, and they get in when they see good volume. That is literally all they do. So make sure you follow Aristotle. Aristotle's Investments. Follow him on Instagram. Follow Kevin Trades. Anybody that's really getting money trading options, follow him. Because you gotta always be watching somebody that's better than you. That's how you're gonna get better. So basically learn from watching what they do. I bought Aristotle's book, $20. I had joined Kevin, that Kevin dude. I joined his chat see like why is he in this? Like he give explanation of why he's in everything. Because at that point in time, I was like, all right, because his chat had cost like $60 to get into, something like that. And I was like, all right, I'll get into it because if I don't know what I'm doing, I'm gonna lose the $60 anyway. So
Yeah, it's worth it.
yeah, and bruh, like that literally took me to the next level. Seeing how he
I paid to
charges.
join this thing, and I didn't think I was gonna make that much money.
And you you done made somebody's salary, bro.
But I'm saying I did, but like I didn't like, and I lost like 20 bands because I ain't set up a stop loss. It's just ridiculous.
It's all a part of it, man. Everybody's path gonna be different. Yeah, this stuff that I'm telling you is literally the stuff that I learned from watching videos, watching what they do. And this is exactly what they do. This Twitter trade that I'm getting into, the reason I'm getting into it is off of something that I learned from this Kevin dude's chat. And we can see Twitter is at 2087 right now, so it's working out right now. So this Twitter trade, I said I'm gonna get into it because of a few reasons. Now you got to use your head when you're trading as well. Trading is more psychology than anything, honestly, because I'm sure a lot of y'all have been in stuff where you cut it and the next day it started running. It started doing what you thought it would do, or you cut it and the next few days it took off. You missed out on a whole bunch of money. Or it might be sometimes where you held something too long. It's all about trading psychology, and that's something that Kevin dude. That's something that he stresses a lot, man. He is amazing, man. I really learned a lot of stuff from him. And this is something that he really emphasizes a lot in his swing trades is a range. So range is just kind of the same thing what I showed y'all with Tesla. This is let's look at this 4-hour chart for Twitter. Looking at this 4-hour chart, we see Twitter been in this range right here since Friday from about 27 up to 28.98. So it's been in the range. So it's really not a good trade in between this range, but you might say, if it's still in the range, why are you in? I'm thinking that it might break out of this range. Can anybody tell me why I think that it may break out of this range tomorrow? Or it doesn't even have to be tomorrow. It's a swing trade. So within the next few days, why I expect Twitter to start running up.
So based off of that right there?
Yeah, based off of what happened today, right here. Why? Can anybody guess why I swung Twitter?
Is that a chart pattern?
No, it ain't really even a pattern.
Cause volume.
That's a little bit of the reason. The volume is decent, not nothing too crazy. Y'all take a look at the amount of green candles. Like how many buyers have stepped in compared to the sellers.
Oh, okay.
You look at these. Look at how many people are buying this up right here today on this 1-hour chart. And everything, almost all these candles. Oh, it's too close. Still too close. All right. Anyways, whatever. Almost all these candles right here have long wicks at the bottom. Long wicks at the bottom, remember, is buying pressure. So it's a lot of buying pressure this whole day on this hour chart. The sellers was trying to push it down, but they couldn't. Couldn't push it down. So what's telling me that the sellers couldn't push it down today, that's giving me an indication that maybe this thing could break out of this range. So like I said, if something breaks out of a range, it's kind of like built up pressure. So when it pops, it's gonna go to the next resistance. The high point of this range, you can see here, counting in. The high point of this range is 28.9, which the way it's looking is gonna be over that in the morning. So breaks out this range is gonna go to the next support or resistance, which looks to be,
No, not yet. I don't think so.
is this line accurate? Yeah, it looks like this line is pretty accurate. 30.43. So that's where I expect it to go. Am I saying it's gonna hit there tomorrow? No, but I wouldn't be surprised if it did. Now, so that's one reason. Another reason is using my fundamental analysis. So Twitter is in the same sector as Facebook and Snapchat, social media. So we look at Facebook and Twitter. See, I got all kind of stuff drawn for these different companies. If we look at Facebook, right here it's at 212, but the range that the price that Facebook had to get above these past few days was, it was actually struggling again today. I gotta change it. Y'all see where Facebook was struggling right here. So there's been a lot of times, the past couple of days, Facebook could not get above 211.65, right? So if we look above 211.65, where's the next resistance? It's really not any resistance until this high point of 217. So why does that matter? Why does Facebook have to do anything with Twitter? Because a lot of times, a lot of these companies will be up and down at the same time because they're in the same sector. So Facebook, you notice that all of these are on the verge of breaking out of a range at the same time. That's crazy, right? So they all will take momentum from each other. When we look at Snapchat, it's the same thing. Snapchat has broken out of their range. Snapchat had to break above. You see, Snapchat had trouble breaking above 18.16, for the past few days. Snapchat's above it. So Snapchat hadn't broken out after hours already. So I actually have to plot where the next point for Snapchat will be. It's going to be somewhere over here. Let's see a little area here. So the next place I'm expecting Snap to have a little trouble is 1894, which doesn't sound like a lot, but for Snapchat, that's a lot for Snapchat. 50 cent to $1 move, that's pretty good for Snapchat. So all of these are on the verge of breaking out at the same time. So, using my technical analysis with the individual stock as well as using fundamental analysis, noticing what the other stocks in the sector are doing. And also thinking about, coronavirus ain't got nothing to do with Snapchat or Facebook or Twitter, and they're actually benefiting these companies. So using my fundamental analysis and technical analysis, I was able to say, okay, this might be a good trade. Now this thing could honestly run all the way up here. We don't know, but it can definitely run to 30.43 very quickly. And that's why I got into this Twitter trade. So everybody kind of understand my rationale for that. So what is my risk reward for this? Risk reward, very important. You gotta know risk reward in trading. The reward is
How much left on the thing?
This is our reward right here. All the way up to actually you could honestly point all the way up to the top of the 35.5 if you wanted to. So this could honestly be our max reward right here. But you know, just to play it safe, we say our max reward is right here. Then you know what's our max loss? I'm gonna get out if it comes back down, it breaks below the pattern. So those that ask, am I still in Twitter? Am I still in Twitter? If Twitter, now let's see. So we have, let's see how much. Okay, so let's just say from 29 to 34, that's about $5 worth of profit. And then we're gonna risk if it breaks below 27 point, what's that, 27.32. So $1 of risk against $5 of reward. 5-to-1 ratio. So we'll see. Now, am I saying that it's going to work out? No, nothing is guaranteed in trading. It's, like I said, it's a probability game. So it's showing you that this has been a support. It actually has been a support even farther than its box. It's been a support all the way back here the past 20 days. It's been a support. So the probability of it holding support is a lot higher than it breaking the support and going below. So this is a 5-to-1 ratio trade right here. I'm saying you really can't ask for too much better than that. All right. Y'all understand what I'm saying here?
Yeah.
Right.
Yeah, I got you.
So this is, you know what I'm saying, not saying that it's guaranteed to work, but this is a high probability trade. So this is what you want to look for. You want to look for high probability trades. Because that's all trading is, honestly. Once we place this trade, we have no control of what happens next. Our job is to execute. If you don't execute, you know what I'm saying, you're never going to know what's going to happen. You're going to be, dang, I should have got in. How many times have y'all had that feeling? Dang, I should have got in.
Every day.
Every day. All right. So just execute, man. Like if you lose, so what? As long as you're using proper risk management, you can lose 9. You can lose. Let's say you take 10 trades and you are 50-50. You win 5 and you lose 5. But the 5 that you lose, you stop your losses at 10%. And the 5 that you won, let's say 3 of them was over 100% gains. You made bank, even with a 50% win percentage, because you was using good risk management. Risk management is key. It's key. People with good risk management are the people who last. The people who don't have good risk management are the ones that most of the time blow their account, because especially in our group, we're not going to lose trade after trade after trade. I think we can agree that we definitely win more than we lose. So yeah, man, you just gotta execute. If you see it, you know what I'm saying, as long as it makes sense, go for it, man. The worst you can do is lose. As long as you playing with good risk management, it's all right. Forget it. Go to the next one.
For each trade, What do you do? Less than 20% of your account?
It really depends on it's really tough because it honestly depends on how much you have in your account. So with this small account challenge that I'm trying to do now,
Okay.
I really with this little $200-300 account, you really can't use 10% of your account on every trade because that's like $20, $30 on the trade, which most of the time is not gonna do much. So, but yeah, definitely like for people that got like 5K, you know what I'm saying, 2-3K and above, yeah, definitely 10 to 20% on the trade is definitely gonna be well over enough to get you some money and build your account. Because think about, you know what I'm saying, think about somebody that is using a 50K account and they be like, oh, I stopped lost at 5%. Well, yeah, duh. You know what I'm saying, they be like, all right, I'm gonna take the profit at 10%. Yeah, 10% of a 50K account is 5K. 10% of a $200 account is $20.
Yeah.
So there's a huge difference. So one thing I learned is do not compare. Don't compare yourself to other people, especially people with more equity, because y'all are in two different situations. A loss that a person with 50K can take is not a loss that a person with 20K can take. A loss a person with $500 in their account cannot take the same loss that a person with $100 in their account. You know what I'm saying? So
Yeah.
always focus on that percentage, man. But yeah, with large accounts, I would definitely say most people say no more than 10% on a trade, and then out of that 10%, they're only risking 10% for a stop loss on day trade, so they're really risking 5%. So
I'm back.
it's the process, though, man. You see PayPal here. So I had PayPal the other day. One that I should have kept. I had PayPal on my small account. I got in. PayPal had a bull flag here. When PayPal closed above this bull flag, I got in, and I sold somewhere over here. We see today PayPal shot up to 147. So I was in right here on my small account. I got a contract that was like $100, $130, something like that. And today, let's just see how much the contract is worth. I'm probably gonna get upset because I sold it. Contract is $1,600, and I sold it for maybe like 300, something like that, 400 almost. So I mean, hey, that's just how it happens sometimes. It's always gonna be those instances where you're like, man, I should have held longer. Yeah, I should have did this. I should have did that. But you just can't compare yourself to other people. Just always focus on that percentage, because the same way that you would be upset about a 10% gain, just imagine would you rather have that 10% gain or a 10% loss? So that's pretty much what I wanted to show y'all, man. That's how I like to trade. It's what I like to do. See, I don't like to do all this complicated stuff. I keep it simple. That's the best way to go.
Thank you.
Yep. So anybody got any question about anything before I close this out?
No, I'm good.
Yo, RJ,
Yep.
what are your thoughts on Square right now?
Man. See. Square, they don't stay over about long. You see on this large time frame, Square is not a company that stays over about. So they may push up tomorrow, but I don't expect them to keep pushing up, you know what I'm saying, for 2-3 more days because Square just doesn't do that. So they might push up tomorrow. It looks like they're forming a bull flag, honestly. Yeah, they are. They're forming a bull flag right here, right now. So I'm gonna show you. Yeah, they might run tomorrow, honestly. Yeah, so Square's probably gonna run tomorrow from how it's looking. This is a bull flag right here, which is a continuation pattern after a run up. So Square might run tomorrow. But they will be coming down soon. Same thing with PayPal. You take a look at PayPal. PayPal's RSI on the 4 hour. This thing is off the chart. Like it's up here above 80. You know, so Square and PayPal gonna move together. So they're gonna be coming down in the next couple of days. Now, are they gonna come all the way back down? They're probably not gonna come all the way back down to where they was, but they'll have a pullback.
Yeah, I was just looking for a second opinion because I was feeling the same way. Appreciate it.
Yes, sir. I definitely probably getting some puts in on them tomorrow, honestly, over the weekend or something.
Why Noah looking like that? Noah and Gwen go together. Noah and Gwen.
Anybody else got any question about anything? All right. If not, man, I appreciate y'all hopping on. I didn't even know I was on for this long. Man, that's crazy. Oh yeah, for sure.
Thanks, everyone.
I'm gonna post this in the chat. So I appreciate y'all for hopping on.